Welcome on board our guests for the evening. And remember, over the next 1 hour, what we're going to discuss is just how it is that the market is going to view some of these exit polls. And joining in for just that, market expert Ajay Bagga, Emkay Global's Dhananjay Sinha, Peerless Mutual Funds Amit Nigam. We've got Alevin Business Advisors Alistair Newton, AUM Fund Advisors Samir Palod, and Capital Minds Deepak Shenoy, who's of course joining in on the phone line as well. Gentlemen, good evening and thank you so much for sparing time for us today. Mr. Bagga, I'm going to begin by asking you, the fact is that while sure in UP you're seeing the BJP making good stride, at least the exit polls seem to say so, they're getting a lion's share of the seats. At the end of it, it seems like it's going to be hung assembly, and then you've got Akhilesh Yadav sort of out of the blue saying that he's willing to join hands with Mayawati. How do you expect the markets to take to this chatter tomorrow?
I think it creates some amount of uncertainty, and the market would react to that. The markets have been complacent. We have not seen shorts being built up. So more or less the market was discounting a BJP victory. So, come Saturday, if that is not the reality, markets will react. And tomorrow, based on these exit polls, I think uncertainty increases and you would see a reaction in the markets.
Alistair, what about you? How have you observed how the numbers have trickled in so far? You've been observing the political scenario for India for some time now, including Mr. Modi's affairs. Do you think, too, that market would turn nervous here in India, the way the initial numbers from the exit polls have come out?
Well, I think the first thing markets are going to recall is that exit polls have been horribly wrong in the past. And we do need to be cautious about this, particularly in the polls we've seen today. Two things. First of all, most pollsters are actually giving a fairly wide range of what they think the seat division is going to be. And there are differences between different pollsters as well, perhaps most notably in UP, where on the data that I've seen, we've got 4 pollsters predicting a BJP plurality, and 2 pollsters predicting a different result. So I think markets are going to be cautious until they actually see the hard data coming out on Saturday. Second thing I would say is I think there will be a difference of perspective between investors actually in India and investors outside India. I think investors outside India are likely to be more positive if if the majority, perhaps I should say, of exit polls are proved to be correct, because they are going to see it as a booster for the BJP, perhaps especially after the amount of criticism there was over the withdrawal of high denomination currency last November. It does seem that BJP, by and large, with the exception, of course, of Punjab, has got something of a vote of confidence here. Thirdly, and perhaps most importantly of all, I think as previous commentators have said, this does bode well for the BJP in the 2019 general elections. Obviously, we've still got 2 years before we get to that point, but this has been a very bad election round for Congress by the looks of it, and it does look as if BJP, barring accidents, mishaps or big mistakes, is set fair for 2019. I think investors outside India will look at all those factors and say, okay, this is a scenario we're familiar with. We know that BJP is not going to have a majority in the upper house before 2019, come what may. So this is actually a pretty decent result. From the perspective of BJP itself, I would say that they will probably greet these results, if they prove to be consistent with the exit polls, with relief rather than euphoria. But it is still not a bad outcome for them if this is how things turn out on Saturday.
Right. Deepak, as Alistair was saying that exit polls are notorious regarding their accuracy. I would like to understand from you first, how do you think market was positioned going into these exit polls? Because the unorganized betting market was already indicating a clear win by, or indicating the numbers people were betting on were tilted towards BJP. But the numbers which are actually thrown up by exit polls are not in line with that. So first, do you think the market would have a litmus test between the expectation and the exit poll before we go to the actual result on Saturday?
Ajay, I think, the markets will probably continue being, a little circumspect, not going up, not going too down, because this is not really a decisive move in either direction. There may be a little bit of a disappointment, but I think rightly said, is we have a problem with accuracy. Things don't really work exactly as our exit polls say. So if things were to be really different when the actual results come out, then the reaction on Tuesday will be more dramatic. So I think there's one factor that probably has to be noted is that anti-incumbency hasn't really worked against the BJP. It's worked in favor of them where they were not the incumbent. So that may be a small relief, and perhaps the market will take a note of that. Having said that, I think because of the uncertainty and the the lack of actual clear victory for BJP in the UP, in Uttar Pradesh, I think the market may not take it very kindly right now.
Dhananjay, does that resonate with you? Because everyone sort of, so far who's spoken seems to agree we're not going to see any euphoria. We're going to see some relief. And of course, the real reaction will be on Tuesday. What's your own sense on how this is going to play out tomorrow on the street?
So, see, the thing is that there is no precedence in terms of, how the market would react to a sort of a state election. But we all know that post the 2014 election, the market actually ramped up quite significantly in 2014 and thereafter. So there is a sort of a extrapolation that generally people consider emanating from the election outcome, which if is in favor of the BJP, there is a general perception that the market would respond positively. But you also have a contrasting example in Bihar election, where the BJP lost to the Grand Alliance, and the market actually jumped up almost like 10% after that. So let's say if you look at Sensex, then Sensex actually rebounded from a level of something like 25,000 to 27,000. So there was a ramp up of about 8 to 10% soon after the election. So this time around we'll have to see what the momentum is looking like. Earlier in the Bihar election, it was a sort of a correction before the election. This time, so the momentum was bad, so was sort of negative. This time around, the momentum is positive because the market has actually recovered after the demonetization shock. And currently, if you look at the benchmark indices, they are above the levels they were on 8th of or prior to 8th of November. And if you look at the mid cap index, it is much higher than what it was on 8th of November. So the thing is that you already have a sort of a positive momentum that has been there. So if you look at the UP election outcome, if BJP wins, I think the momentum might just sustain, but it may not necessarily be a blip up as far as the the market reaction is concerned. So I think that's how I would look at this event.
Right. Deepak, I want to just bring it back to you. And, everyone seems to be cautioning each other here that let's not run ahead of ourselves and take it that it is indeed going to be a BJP win. But can we say one thing with certainty, that many thought this election, or these elections rather, were going to be a referendum, so to speak, on the note ban? And clearly that seems to have worked in favor of the Modi government.
Yes, I think, from that perspective, they haven't seen a drubbing. I think that would be fair to say that demonetization has not impacted, if the votes actually come out like this, then the demonetization piece hasn't impacted, at least the states they continue to rule, Goa, Uttarakhand. So we're not seeing a, disastrous result over there. However, some of the problems that you've mentioned are also the fact that we don't have credible alternatives in many of these situations. Where there have been credible alternatives, like in Punjab, we've seen a complete change of stance. So there is a bit of that as well. That is potentially, if there is a powerful leader or a set of leaders that come in, that may be a threat to the Modi government coming forward. But demonetization, I think, is not a factor that has impacted their chances in this election. At least it seems from the exit polls.
Alistair, Uttar Pradesh, the key the swing state for this set of elections is largely the complexion of the voters are agri-led agrarian people, service class, middle class people. Rural belt is very big out there. If indeed the BJP is in a leadership position there, what do you think would have worked for them? Because up till now, BJP hasn't been in that state for a very long time. And at the same time, just before the polling started, there were some announcements which had shades of appeasement, the rural housing scheme, interest rate subvention, maternity benefits to rural women, all of that. Do you think that would have worked in the favor, or just promises of jobs and growth?
I think all of the above. In fact, you may recall on previous occasions on ET Now, I have said that I think one of the reasons why we saw the currency withdrawal at the time we did was in order to give some fiscal leeway. And I think we did see that to an extent in the budget. I think it was a budget which was consistent with upcoming elections. I think that has definitely had a positive impact. But I also don't think we should underestimate the persuasive powers of Prime Minister Modi himself. Now, we have seen him fall flat in state elections in the past, but he's certainly been heavily involved in this election, and it does seem to have paid dividends for BJP in UP. Modi is a very commanding figure still in India. He does attract a lot of respect. He is charismatic, and I don't think we should underestimate his campaigning skills and how important they have been in what looks like quite a positive BJP result, and certainly a very positive result, as you say, historically in India's largest state.
Right. Ajay, in fact, Alistair made a very interesting point, and you are a market participant, a market guy, hardcore for decades now, and we all know how the stock market community loves Mr. Modi. How convinced are you of the persuasive powers of Mr. Modi? Because in UP, situation is different, right? BJP hasn't been in a leadership position for a very long time. Do you think persuasive powers would have worked in their favor?
Yeah, very difficult to call, as Alistair was saying also, Ajay, a lot of these seats, the difference will be 1,000, 2,000, 3,000 votes. So, no matter how statistically significant the polls are, it's extremely difficult to call. And given how Brexit and Trump victory worked out, even in the very developed markets, the votes have not come through. Having said that, what do we do tomorrow morning? I think tomorrow morning is a time to stay on the sidelines. If you look at the domestic institutions, mutual funds are sitting on over 30,000 crores of cash, which I think a part of that will get deployed over the next 15 days. There will be some NAV management going into March 31st. Similarly, for the insurance companies, quite a bit of cash on the sidelines. Come Tuesday, once we have clarity on Saturday, hopefully we have clarity and we don't have only a hung assembly with no government in sight. That will be a poor outcome. The best outcome, of course, for the market perception would be the BJP clear victory in UP. That will be looked as very favorably. Market has not really positioned for a BJP loss or a hung assembly. There are not too many shorts in the market. Puts have not been bought. We are seeing a complacent market. So it's an asymmetrical market. If the BJP wins, it's a slight move up, maybe 1 to 2%. But a BJP loss or a hung assembly could mean a much sharper cut in the market. So that's the caution we would like to give. It's a long weekend. No harm in staying on the sidelines and then coming in on Tuesday with all the benefit of Monday trading having happened in the offshore market, getting an idea of where the markets are headed. And then we stumble into another big event with the Fed meeting. So the Fed decision is looming. That would have some sentimental impacts on emerging markets. Is it fully baked in? I don't know. I think the bigger issue will be what does the Fed say about accelerated rate hikes? I think that could spook emerging markets a bit. So not a very good, very happy situation for the markets, but that's what opportunities are made of. So I would frankly welcome a correction as a time to get in and buy stocks on the cheap.
Ajay, we will actually talk about that and ask all our panelists, where the opportunity is, should we actually see a correction. But Amit, I just want to drag you in on this discussion as well. And, also talk a little bit about the point that, let's say we are for now going with what these exit polls are telling us. Clearly, the BJP making, some rapid strides. Do you think that will also embolden their ability now to go ahead and maybe, push through some bold reforms, which many would argue so far the government has been lacking on?
So I think the reform process has continued during this entire tenure of the government at the center. So even the GST, if we recollect, the bill was passed despite the fact that the numbers in the Rajya Sabha today don't seem to be in favor of the NDA, and hopefully we should see that reality in a few months from now, and once that is one of the biggest reforms probably to happen to our country. So GST, once that happens, we will see a complete change in the way India has been doing business, and therefore this event only helps. If the results come out the way the exit polls have been indicating, then we will see a far more impetus to the fact that reforms which were otherwise being held back probably will be pushed forward, which should improve the economic outlook for our country in times to come.
Sameer, what is your own sense? Because the fact is that, investors have been treading water ahead of these results. What are the downside risks that you think lie in this market? Because as Mr. Bagga himself was saying, that it isn't like the market is saying or doesn't expect the BJP to win.
Of course, we are vulnerable to sort of global events, and we might see some sell-off on the basis of the UP election results not going the street's way. But given the liquidity that's there in the Indian markets and that's still waiting to get deployed, we don't think that the downside is on the sort of broader indices is more than 3 to 4%.
Dhananjay, most of the panelists here are talking about 4 to 4% upside downside, depending on the actual result of the polls. But in your view, what's the variance between the exit polls, the number which has been come out, and actual result which could come on Saturday? How would markets react if there's a big variance?
I think that will be building in too many scenarios, and I think it is a function of how the markets react to the exit poll. So let's say the exit poll is in favor of a pro BJP outcome. There might be the momentum, as I said, can continue. Positive momentum that has been there, it might just continue. If the actual outcome is not matching what the exit or the exit outcome is, which is pro BJP, then there will be a sort of a correction. In the context where the exit poll says that the BJP is going to lose, as I said, it would typically be a sideways thing. And I think if that is followed by a scenario where actually the BJP wins, then the momentum might actually sort of become somewhat positive.
Alistair, for a moment, looking beyond the polls and looking beyond Indian markets, if one were to talk about emerging market as a pack, one important event to stare is actually the US rate hike possibilities. Now, traders over there are almost factoring in 100% probability. What are your thoughts on that? In event of an actual rate hike, how do you think emerging markets and India would behave?
Well, again, as I said previously on your channel, I think India, among the emerging market constellation as a whole, is relatively immune to action which the Fed is, I think, very likely to take next week. We probably, as things stand today, are looking at a much more hawkish stance by the Federal Reserve. Clearly, it will have an impact on India. It will act as on emerging markets generally in a negative sense. But I think India is better placed than most. And there is one other important thing which has gone on this week, which could actually have a positive effect on sentiment over India in the broad, big picture. And that is the crash in the oil price this week. I mean, we've seen WTI go back below $50 a barrel today. And it looks like we are seeing a softening in the oil price from where it was. Now, that clearly is positive for India, big net energy importer. We've seen India benefit from the big crash in oil prices a couple of years ago. We're talking another 10% off the price of oil, which we've seen this week, which ought to be helpful and offset to an extent at least any negative drag we get from the Fed, which might not be immediate, but because the Fed will do what it does, markets will react accordingly. But over a period, we may well see a lower oil price helping to offset any action the Fed takes to push up rates.
Okay, so a March rate hike is almost a done deal, and the fall that you're seeing in oil prices, of course, a blessing in disguise for India. Ajay, let's go back to the point that we were making about, market strategies. Should we actually see some sort of a correction? The fact is that what's really helped hold out this market and perhaps even keep a bottom in place is the buy on dips that we are seeing. Should the opportunity, Mr. Bagga, arise over the next, say, couple of days, where do you see value at these levels?
Value is very difficult in these markets. I think IT is one place where there is value, but enough of overhang because of the H1B. If 6 bills a day are being put in on H1B, so clearly, there is a lot of overhang. But I would say in a contrarian sense, in a value sense, IT is probably one place that can be looked at. Select Pharma is another place. But overall, Tanya, how I am looking at it is, irrespective of the result, if BJP wins, they come through much stronger and hopefully they'll push their structural reform agenda faster. If they lose, I think the reform process gets even more accelerated. The first and the biggest beneficiary will be where the maximum votes are, which is agriculture. That sector has shown good growth last quarter also. So all agri-related stocks, I think that is something you can safely bet on irrespective of the outcome. Second is, sectors like construction and cement, suppliers into the construction sector. I think those kind of sectors will get a big fillip because they'll really start counting into the 24-26 months into the next national elections, and you will see a lot of determination by this government to address the wider voter base. And so we have to, benefit from that by buying sectors which will be serving those voter bases.
Samir, what is your own sense, and especially on the earnings recovery front, you could argue that things were on the mend and then came along the note ban, a bit of a blip perhaps, or a bump in the road. Do you think that a full-blown earnings recovery will continue to elude us and it's something that we're not going to look at maybe over the next couple of quarters?
No, absolutely. That clearly is the thesis. We are expecting earnings growth in FY18 and in FY19. Though from what we've seen in the current year, possibly the impact of demonetization as well, we believe that it's going to be back-ended in FY18 rather than in the first 1 or 2 quarters of FY18. I think the full impact of earnings recovery will start towards the end of FY18.
Alistair, there has been a very big contribution of global macros in the Indian, the way Indian narrative has panned out in the last 2-3 years, and that has helped Mr. Modi too, giving them a lot of fiscal room for the capex they have announced so far. Crude has actually been very low, and after this big up move, it has started its fall, as you were just talking about. Do you think this the helping hand would also go a long way for the current leadership to actually go across and keep on spending or announcing big capex via the public sector enterprises in the rest of the tenure they have in government?
I think they have to go for broke on this, and obviously one of the things they can do is capital investment. Reform, let's just go back to something I said earlier. Reform is still going to be quite difficult because of the absence of an upper house majority. But capital investment they can do. They can boost economic growth that way. And let's remember that most economists do expect the Indian economy to bounce back in any case in the second half of this year, following the drag which we've seen as a result of the withdrawal of high denomination notes. So I do think overall the outlook for India going into the second half of the year, the Indian economy that is, I'm not going to comment on stock markets, it's not my field of expertise, but I do think the outlook for the Indian economy into the second half of this year and into 2018 actually looks pretty good. And I do think that investors outside India are going to look at the macro and say, this is still a very positive picture. We still like the RBI. The RBI is a big favourite with investors, and with good reason. It is a remarkably competent central bank, as I've remarked on many occasions. And at the moment, there does seem to be some sort of ceasefire between the RBI and the central government in Delhi, which is clearly a good thing in terms of market sentiment. So overall, I'm pretty positive, and I think you'll find that most emerging market fund managers outside India are still pretty positive if we take not a 4 or 5 day view, such as we've been talking about for most of this program, but actually a 4 or 5 quarter view going forward.
What are your thoughts? 4 or 5 quarters ahead, beyond the UP polls, beyond the rate hike fears, Q4 onwards or Q1 onwards, do you see earnings to start improving? In fact, 3 major brokerages, Goldman Sachs, Morgan Stanley, and one more, I'm not remembering the name, have actually upgraded the EPS estimates for FY18 already. Ajay?
Oh, sorry, I didn't realize it was for me. See, overall, the recovery has been pretty sharp. Even in the last quarter, we didn't see that much of an impact of demonetization. This year, the big story is the recovering global macro, and that will have its attendant good impact on the Indian economy as well. We are seeing already, the Baltic Freight Index recovery in the last few weeks. That is a good indicator of a recovering global trade, recovering global macro, and that is going to carry us forward. Having said that, what are really the headwinds for the economy? I think there has been an impact of demonetization on some parts of the unorganized economy. How soon does that get resolved? The big problem for us is highly leveraged corporate balance sheets and a ballooning NPA on the bank balance sheet. So the credit traction is not there, the private capex traction is not there. In this kind of a scenario, classic behavior would be the government to pump prime the economy, but we don't have that much of fiscal space for a fiscal stimulus. Monetary stimulus has been held back. It's not really there. What has helped is the savings on the subsidy bill of nearly 50,000 crores. Second is the hand of God in terms of oil going down from $100 to 30 and then coming back to 50. What the government has done is the 100 to 30 move, 75% of that move was pocketed by the government in terms of enhanced taxes. And as the prices have moved up, it has been passed on to the consumer. So that tax portion of the government has stayed intact, and that is what has led to a much better fiscal situation. So those two have been helpful, but you need a much bigger spending by the government. Only then you will see maybe a year down the line private capex coming back tentatively. That remains the biggest issue. Rest of the private consumption economy is doing very well, as even in the last quarter we saw very good numbers, and that continues to do well. So what is lacking is investment, and concomitant with that is the jobs scenario, which they will need to address if they have to be re-elected.
All right, gentlemen, I'm afraid we've completely run out of time on this discussion. But big thank you to each one of you for taking time out for us.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.